In April of 2023, I told you that Euro banks were undervalued. It is now 2 years and 2 weeks later, so let's check in on this prediction. First of all, what does it mean to be undervalued? So if you buy a stock of a bank or any other company, you want it to appreciate in value. And why would it go up? Well, probably because its future profits have gone up. So for example, take this Portuguese bank. It has gone up a huge amount, almost 500% over the last 5 years. And you see the PE ratio is 9.73. So it is trading at less than 10 times its most recent profit. So it's 2024 profit. But if you look at the stock price in the beginning of 2023, it was about 1/3 of what it is today. So at the time, it was trading at 3 times its 2024 profit. So yeah, it's pretty obvious in hindsight that this bank was undervalued. Now, the problem is that not all banks are listed on the stock exchange. So of course, in this video, I am only going to look at banks that have listed stocks. Now, a second problem is the data on Google. So this is a picture that you can easily find on Google. So if you just Google the bank's name with stock price, then you see these charts, but you only can select fixed periods. So you can go back 1 day, 5 days, 1 month, and so on. But in this video, I want to change this time period. So what I did was in Google Sheets, download the stock prices from the beginning of 2019. And it's going to become clear later on why I chose that time period. Okay, let's get started. So what banks did I look at? In France, these 3 big ones. And in France, you also have a couple of non-listed banks like BPCE or Crédit Mutuel. In Germany, I only found 2 banks on the stock exchange. So Deutsche Bank, the largest German bank, and also Commerzbank. And actually Germany and to some extent France have kind of the most communist banking systems, by which I mean that not many banks are on the stock exchange, but a lot of banks are either owned by governments. So in Germany, you have the Landesbanken, which are owned by regional governments. And for example, also Commerzbank, the federal German state, long had shares of that bank. And specifically in Germany, you have hundreds of cooperative banks, so which are owned by their clients, but are also not on the stock exchange. And another big German bank, DZ Bank, is a part of the VR group, which is also like owned by cooperatives. Similarly in France, so BPCE and Crédit Mutuel are also cooperative owned, and then the French postal bank, La Banque Postale, is obviously also government owned. In contrast, in Southern Europe, you have a much more capitalist banking system in the sense that banks are typically listed on the stock exchange. So here I picked the stocks of the 4 largest Spanish banks. So Santander and BBVA are quite well known also outside of Spain because they have big operations, especially in Latin America. CaixaBank is the largest domestic bank. The largest bank on the Spanish market itself. And then you also have Sabadell. But for example, you also have banks like Bank Inter and Unicaja, if I pronounce that correctly. But I didn't want to add too many banks, so I picked a maximum of 4 banks per country. Similar situation in Italy. So the 2 big ones are Intesa and UniCredit. And then you also have Banco BPM and BPER. And again, I left out a couple of banks that have stocks on the stock exchange, like Montepaschi di Siena, the oldest bank in the world, and you also have banks like Mediobanca, for example, but I didn't include them here. I also picked two smaller countries, like the ones I already talked about are the big four in the euro area, but the Netherlands and Belgium have like mid-sized economies and also a couple of big banks. So ING is the largest Dutch bank. You have ABN AMRO and KBC from Belgium, which is also quite active in Central Europe. So why only these six? Because in total there are 20 countries in the Eurozone, but these six countries that I mentioned account for more than 80% of the GDP of the Eurozone. And in the other countries, there are only a few banks that are worth mentioning. So I already showed the Portuguese bank. Then you have two banks in Ireland. You have Nordea in Finland, and in Austria you have a couple of banks. And fun fact, Austria, which is about 8 or maybe even 10 times smaller than Germany, has more banks than the two in Germany. Um, so if I take the average of the banks that I showed you per country, if we look at the time that I made my prediction that banks were undervalued, so in April of 2023, and compare that to the beginning of the period in January of 2019, you can see quite some volatility, which I will explain later. And for example, the Italian and German banks had gone up in stock price by about, so eyeballing, I'd say a third, while the other countries' banks, they are mostly flat over that time period. And then what I show here is the average of all 16 banks that I already shown the stock prices of. And you can see a couple of times where there's a sharp decrease in the stock price. So the first one is in February of 2022, which is of course related to COVID. So most of us have been trying to forget that period because of the lockdowns and stuff like that. But also for banks, the arrival of COVID in Europe meant a lot of uncertainty. So you probably remember there were lockdowns. A lot of businesses had to close. So there was a huge uncertainty. How long is this going to last? What's the economic impact going to be? And specifically for banks. So if some of your the people or the businesses who have borrowed money have to close, you as a banker cannot know if they will be able to repay you. So there was a lot of uncertainty on that front. And also because the ECB wanted banks to preserve their capital, there was a ban on dividends. So investors who buy bank stocks because of the dividends didn't get these dividends. And you see that the period of COVID in the stock prices of banks, it lasted about 2 years. So after 2 years, in the beginning of 2022, banks on average had recovered, and they were trading at or maybe a little above February of 2020. And then there was another menace from the east, not a virus, but this guy who thought it was necessary to invade Ukraine. And this time bank stocks also dropped, maybe 30% roughly, or maybe 40%, not as much as they did during the beginning of COVID. And some banks were hit especially hard. So for example, this bank, Austrian RBI, does a lot of business in Russia and its ally Belarus at the time. So its stock price was cut in half and even more than that. And you can see that even today, it hasn't recovered to its pre-invasion level. And another thing that's related to the invasion of Putin and the war in Ukraine is inflation in the euro area. So as you can see, inflation had been low for a very long time, even much before this period. But then in the aftermath of COVID, there was this recovery. So people there were more there was more travel and more demand for energy and fuel. And so there had already been an increase in inflation. And then, of course, because the uncertainty around natural gas deliveries from Russia turbocharged inflation. And again, this was not good for banks because if their clients, so the people who had borrowed money and the businesses who had borrowed money for banks, suddenly saw an increase in their energy costs, again, there was uncertainty about will they be able to repay their loans and what impact is it going to have on the economy. But as you can see, while COVID lasted about 2 years and the stock price of banks, the energy crisis and inflation crisis lasted about 1 year. And by early 2023, banks had again recovered from their previous highs. And then you can see in the beginning of 2023 a third shock. Again, this fall in stock prices was less than the previous one. And what was the cause this time? Now, the menace didn't come from the east, but from the west, from across the Atlantic. So in March of 2023, a couple of American banks failed. Yeah, I don't need to go into the details. But for people who remembered the last time that banks failed in the US, this was a bad omen. So when did banks massively fail previously? So if we look at this Portuguese bank again, in 2007, 2008, there was this financial crisis in the US, and then it kind of also infected Europe. And then we had the European banking crisis, followed by the European debt crisis. And this was devastating for banks. So as a casual observer, it's kind of logical that you think that here we go again. Bad things are going on in the US, and this will infect European bank stocks again. And at the time, I did a lot of videos about what was going on. So I asked, are European banks in trouble? And yeah, typically, if you see a question mark in a title, you know the answer is no. And that was also the case there. Then I talked about Credit Suisse, so the Swiss bank, which is obviously not in the Eurozone because Switzerland isn't even in the European Union. They failed because of bank runs. And I told you that Deutsche Bank is not the next Credit Suisse, which was also a good prediction, if I can say so. But still, I think it was kind of bold to claim at that moment in time that Euro banks, so banks in the Euro area, are undervalued. So if you listen to that podcast and you were skeptical, I don't blame you. But if we look at what actually happened, so since my prediction, bank stocks have essentially doubled. So yeah, already a good point for me. But then the question, of course, is why I was right. And that's going to be the rest of this video. But if you like to know more about European banks, consider to like this video or to subscribe to the channel because it motivates me to make more of these videos. So the question is like, why were all of these bank stocks up collectively since early 2023? So the easy answer is that bank profits have also doubled since before the pandemic. So you can see in roughly the 5 years since before COVID hit. So the blue line shows the aggregate profit of European banks based on data from the European Banking Authority. So yeah, there was maybe a slightly positive trend, also a lot of volatility. And then during the COVID shock, bank profits almost fell to zero in the second quarter. And then they had recovered by 2021, early 2021, but not just recovered. So they were on a higher plateau from 2021 till the end of 2022. But then you can see even an acceleration or a growth of profits. And now so at the most recent observations, you can see that bank profits are almost double what they were before the pandemic. So I can also show you this. So this is the previous slide, but only the period on which I was looking at the bank stocks. So from early 2019 until, the data on the profits only goes to the end of 2024. But you can see there's a very clear correlation between banks' profits and bank stock prices. And then the question is again, like, okay, we can observe that bank profits have increased a lot, but why is that? What is the underlying reason why these bank prices or why these profits are so high? And if you guess, it's because of higher interest rates, you are right. So let's look in more detail. So how do banks make money? Essentially, a bank's business model, very much simplified, is pretty easy. So you borrow or you lend money to borrowers, so to people and businesses, and you charge a certain interest rate. So that's the blue line here, the interest rate. In this case, for loans for house purchases, so mortgages. So if you want to buy a house, you borrow money from the bank, and that bank charges you an interest. And that, or what, how does the bank fund this loan? Mostly by deposits. And the yellow line shows you the interest rate that the banks pay on deposits, so on money in bank accounts. And of course, there's a difference between the bank on the loan and the bank, or the interest on the loan and the interest on the deposit. And you can see that since 2022, the gap between the interest that the bank receives and the interest that the bank pays out has grown a lot. So if we zoom out this same chart, you can see that for a very long time, so essentially since 2008 roughly, the margin or the gap between the interest received and the interest paid out has been going down. So that was bad for bank profitability. But then in 2022, the margin rose by a lot, and a lot of that is reflected also in the stock prices. But this is just the aggregate figure for the entirety of the Eurozone. But the picture is more complicated if we look in detail to the banks per country. So again, this is now the full range of the stock prices. So you can see from 2019 until the most recent observations in May of 2025, that actually all bank stock prices have risen since I made my prediction that banks were undervalued, but there are big differences between countries. And especially, so the best performing banks, or the countries with the best performing banks, are Italy, Germany, and Spain, while in France and the Benelux countries, so Belgium and the Netherlands, there the bank stocks are also up, but by a much lower amount. So why did Southern Europe outperform? And I also will discuss the German banks separately. So we could look at the interest paid to deposit holders, and here you don't see much of a difference. So the y-axis is the interest rate on deposits from households, and you can see there's some variation. So German households on average receive like more than 0.5%, but is still very low. In France, these interest rates are essentially still zero, but that isn't really why there's such a huge difference in stock prices. We can also look at the other side on the interest on loans. And again, you don't see a lot of difference here, except for France, where it took a longer time for banks to pass on or to charge higher interest rates. I'm not going to go into details. It has a lot to do with the French laws surrounding mortgages. So we are in a bit of a dilemma, like, okay, so how do we explain the difference? But until now, I've shown you the interest rate on new mortgage loans. But what's relevant or what's important for banks is their total mortgage portfolio. So because banks collectively, they have more than 5 trillion euros worth of mortgages on their balance sheets. So more than 5,000 billion euros. And it's not just because you get more interest on new loans, of course, because these are only a small fraction, because typically a mortgage is maybe 20 years that it's on the balance sheet of the banks. So it's more relevant to look at the outstanding amounts of mortgages. And here you do see large differences between the countries, where the southern European countries, so Spain and Italy, there the interest on loans grew much more rapidly. And that's because typically in these countries there are variable rate mortgages. So if interest rates go up, then also if you pay your mortgage, the interest on that mortgage is going to go up. While in what we can call Western Europe, so France, Germany, and the Benelux, it's more typical to have fixed rate mortgages, which means if you had borrowed like before the pandemic at, let's say, 1.5%, then this rate is fixed for the remainder of the mortgage. Okay, and so for the banks, it means that it takes longer to earn more interest. So you can see a very gradual increase in the interest rate that they receive from mortgages. And this is also shown across Europe. So again, this is data from the EBA, the European Banking Authority. And it's not just for Euro area banks, but for a lot of other countries, so all EU countries, and even a couple of countries like Iceland or Norway that are not in the EU. And before I explain what we can see here, you can see that on aggregate, all of the blue bars are higher. And that's because the blue bars show the net interest margin of banks. So roughly the gap between the interest they receive on their assets minus the interest that they pay on deposits and other liabilities. So in the entire all of Europe, interest margins are up, especially in countries like Poland and Hungary, so outside of the euro area. But if we look at the countries that I marked in yellow, these are the 6 countries that we have been looking at the stock prices. You can see that, for example, in 2019, interest margins for Italian banks were similar to banks in the Netherlands and Belgium, while in 2024, Italy has much larger net interest margins, while the margins in Belgium and the Netherlands are up a little bit, but still comparable to 5 years ago. And then, for example, for German banks, there the net interest margin is essentially still the same. And for French banks, the interest margin is even lower than it was before. Okay, and then if we look into detail for the different bank stocks, so for France, the reason that the average stock price is up is mostly due to SocGen. And I recently made a video, SocGen sucks. So if you want to know more about that bank and what could explain the sudden rise in 2025 of its stock, you should check that one out. So for Germany, we have a bit of a conundrum because on average, you wouldn't expect German stocks to do better because the margins are essentially flat. But here you have to remember the communist banking system in Germany, and that these two publicly traded banks on the stock market are not typical German banks. So Deutsche Bank has a lot of activity outside of Germany, and Commerzbank is like mostly a corporate bank. So although they do have retail clients, a lot of their business is lending to small and medium-sized and larger companies. And if you look at the interest rates on loans to corporations for Germany, you do see a steep increase because unlike mortgages, loans to corporates are typically shorter term. And so you also see a sharper rise in interest rates. So this could explain part of the reason why Commerzbank is up much more than the typical profits of an average German bank. And then in Spain, you can see that the two big ones are up a bit less than the purely or more purely Spanish banks, especially Sabadell, which has made a huge rise. So if you would have bought Sabadell during 2020, for example, during the pandemic, you would be up almost 1,000%. So that's a huge comeback story there. And in Italy, so also the largest bank is up more or almost 100% since I made my prediction. But then a bunch of other Italian banks are up almost 200%. So a huge rally in these Italian banking stocks. And then the Netherlands and Belgium, they are also up, but not so much. So it has somewhat to do with the fact that margins on or interest margins haven't risen a lot. And also ING, for example, is not just active in its Dutch home market, but also in Belgium and Germany. But these again are markets where you don't have a lot of benefit from diversification because these have similar market structure. Okay, I'm almost at the end of this story, but so I focused a lot on interest income to explain why profits are up and stock prices are up. I should also mention that banks also earn money not from lending or from interest products, but from other activities. So fees and commissions. So for example, for payment services, or if they sell financial products to clients, this has nothing to do with interest rates. And also here you can see that banks have managed to increase this fee and commission income. Another thing, I was very much focused on the profitability, which is an important factor here. But there's not a one-to-one correspondence between the profitability of a company and its stock price. So, for example, if we look at UniCredit, so the Italian bank, it is up by 650% over the past 5 years. So, okay, we take a positive starting point here during the pandemic when its price was very low. It has actually outperformed Tesla, so the electric car maker. But still, its market cap is more than 10 times lower than Tesla's, although it made a larger profit in 2024 than Tesla did. And the reason that the market cap is so much lower, despite the profitability, is that Tesla has a much higher valuation multiple. So investors are willing to pay 158 times its profit, while for UniCredit, they pay less than 9 times the profit to buy one share. So yeah, banks are not meme stocks, and still their valuations are quite low. But sometimes, like here, if we talk about acquisitions, so something that I haven't really mentioned is that a bunch of banks have bids from larger banks. So, for example, UniCredit wants to buy German Commerzbank. BBVA wants to buy Sabadell in Spain, and also UniCredit wants to buy BPM in Italy. So if you look at these stock prices, so here Sabadell has exploded higher in 2025. BPM is also up a lot. And then in Germany, Commerzbank, since the beginning of 2025 is also up a lot. And so it is reasonable that investors want to pay more for these stocks because they expect a bid from another bank to buy these shares, and maybe you can kind of front run the bid, or maybe you can anticipate a higher bid in the future. And then something that I touched on when I mentioned Deutsche Bank, that a lot of these banks that I talked about are not just active in their domestic market, but also abroad. So Deutsche has a lot of activity in the UK and in the US, for example. BNP Paribas is active not just in France, but also in Belgium, in Italy, in a bunch of other countries. So you cannot just make a one-to-one correlation between the profits or the profitability in their home country and the stock price. Yet another thing that we shouldn't forget is better management, and maybe even just cutting costs or telling a better story about your stock. So that is something important that management can do. And I guess we are also in a better macroeconomic environment for bank profitability. So we've seen governments, like especially in Germany, who want to invest more in defense and in infrastructure. So that's going to give a boost to the economy. And this is also positive for banks if there's more economic activity. And I haven't talked about the ECB in this video, but of course the ECB also raised its short-term interest rates. And it's quite unlikely, I guess, that they will go back to negative interest rates that we saw for a very long time. So that can also put a floor on the expectation on interest income. So thanks for making it all the way to the end. If you're interested in stories about European banks, maybe check out this next video where I tell you that actually there are no European banks. So thanks for listening. Until next time.